morning, everybody. Welcome back to the Everyday Growth Advisors webinar series. I hope you guys are having a good morning here. Thank you guys for tuning into the stream today. We are going over something super important, which is how to manage your position. So today is going to be a special live stream or a webinar, whichever you call it. Welcome, welcome, welcome. Right before I want to go through the webinar, I just want to kind of go through a little bit of analysis that I was doing on the markets right before this. For those of you that followed my call out on Zscaler and also Work, they are both considerably doing well now. This is was a earnings run-up play that I called out last week. I think sometime on let's see, August 28th, which I said another ER run-up play, which I really like, is ZS, which is cloud tech, which is a booming industry right now due to COVID. This might be a good play ahead of ER next week, which I expect them to beat. Might enter this one long with Piton as a run-up play, looking good. And true enough, from 139 to 149 in a couple of days, right? When was that? August 20? Yeah, just over the weekend. Right, so from Friday to Tuesday, I'll take it. 10 deltas, hell yeah, let's get it. And then the other one was Work, which I also called out. Let's see, pretty sure I called it out. There we go. Totally forgot to mention that I entered Work 911, $32 calls, just 2 contracts, nothing too crazy. Even ZS was 2 contracts. Oops. And so this one's up nicely as well, up to 35 bucks from where we were before this. Also a nice little play here. So we're looking at a target of about 36 or so to exit here. I'm not sure if I want to hold this through ER, but it's looking really good for an ER play in my opinion. I think that they will be. But let's see. I'm going to probably hold these positions both through the day today and see what happens. Of course, you never know with this market conditions. Another thing that I want to definitely keep, in mind here is SPY has been looking increasingly bearish here, while VIX has been looking increasingly bullish. So keep that in mind, okay? We're kind of seeing, a retest of certain levels. And the NASDAQ just keeps chugging along, obviously, because tech is just ruling the market, right? But remember that with all of these big rallies, there has to be a point where we'll have a little bit of a correction. So, just don't overexpose yourself. Yesterday, I got stopped out of QQQ puts, just FYI. I had a hedge position with QQQ puts, and I got stopped out of it. So, be careful there. Okay. And then we have the usual suspects for the pre-market movers here. So make sure you go look at that. I did call out some things that I'm watching today. Today I'm watching Facebook for a possible entry, but I want to see a retest of the 280 level here. I'm hoping that Facebook goes bearish here for a while so that I can enter $300 calls for the end of the year. That would be a nice little play, slightly OTM. Microsoft also looking nice here. If we can get a bounce on around the 220 level or 217 level here, right above this supply zone. Okay, this was a old supply zone, and I wanted to bounce on this supply zone to confirm that this supply zone is now going to become a demand zone. So that's actually going to be a nice little play if we can get it to bounce on this channel here. So 220 seems to be the right dollar amount here. And then Intel here, looking nice and bullish. It's been gathering some momentum, not enough volume just yet, but it's been looking like it wants to move, and I've been seeing a lot of flow on this one. So a move up to about $54, $55 is probably very possible, and I think that this stock is undervalued fundamentally. So some leaps on this wouldn't do any harm, in my opinion. And then finally, as I was talking about the VIX has been on a kind of a bullish uptrend here. So be careful as fear starts to creep back in the market. You have to just be a little vigilant. SPX looking a little toppy. And so, yeah, those are things I'm looking at. Not necessarily, that you have to follow what I'm saying. But yeah, just want to say, be careful. Okay, be careful. I don't like this specific condition that we're in. Okay, there is a very look at this, guys. Look at this. Stocks that do this, where you can't see it on the chart, you have to scroll up a couple of times. A stock that can go from $325 to $450 in one day overnight. That's some crazy stuff, right? That's some crazy stuff. That's Zoom Communications. Now, if you tell me that this stock is really worth $454, you got to be out of your mind, right? So you can see the market's in euphoric phase, okay? So just be careful. That's all I'm saying. You know, it's always pays to be vigilant. Alrighty, well, you're all here for this webinar today, which is how to manage positions. I hope that you guys will find this one helpful. And, you know, it's a matter of, you always hear everybody say this phrase, cut your losers early and let your winners ride longer, right? Well, but how do you do something like that, right? How do you do it, right? Like, let's say, okay, when I took the ZS position, right? Well, how am I going to do that, right? The ZS was trading somewhere, where was it? Here, yeah? 138-ish. When I saw it, it was consolidating above this resistance here, and that's when I was like, okay, you know, this seems like a decent play here. We should probably look at this play. Why it's consolidating above this resistance here. It has a upside, and you know, this being a previous supply zone has now turned into a demand zone, right? So it's like a dual zone, right? For people who have taken my EGA mentorship course, which by the way, day one just went through today and it was awesome. This was a dual zone, right? And a dual zone is a key, you know, pivotal point where stocks can usually bounce on and kind of make an upside, okay? And so, you know, you have to take that into account. Now, for example, for ZS here, right? You would take the position. So this is how I recommend you to manage your positions. Now, obviously, this is not the only way. This is not the right way. This is how I do my management, okay? First of all, I got to look for the risk to reward ratio, and that's your own risk to reward ratio planning, okay? Whether you think it is the right risk to reward ratio or not, that's something that you have to decide. That's something I teach on the mentorship course, you know, and that's basically the secret sauce, right? And you need to figure out, is this worth it? Okay, then you figure out it's worth it. Well, where do we set, if this is your entry point, right? Well, how are you going to figure out, okay, how are you going to manage this position? Let's say you enter here, right? Well, the first thing you got to do is, upon entry, is set a stop loss, okay? And the best way to manage your position is to set a stop loss, because that's how you cut your loser early if something goes wrong, okay? Now, you know that this is the old zone here, right? You know this is the zone, right? You can see this is the tip of this candlestick, and this is your other zone here, right? So you have this little zone here that you know is a area which, if Zoom comes down, it can either catch liquidity here, like this could be a liquidity dip, okay? Or it could be a market maker trap, okay? Market maker trap. It could be two things, right? So if either or, okay, if Zoom breaks below this zone, then you know your trade is dead, right? So you can set your stop loss at 132-ish, right? So you're looking at like a $7 loss, $7 in stop loss, okay? Well, there are a couple of ways you can calculate the $7 loss, okay? And we go through this extensively in the Everyday Growth Advisors mentorship program. But the idea is, if you know where your stop loss is, you set your stop loss. Are you going to set your stop loss exactly there, right? Is this where you're going to put your stop loss? Probably not, right? Why? Because you don't want a market maker to come down, touch your stop loss, and then go back up, right? So, and this is what majority of the time happens to you guys. It's because you pick a specific point to be your stop loss. You recognize your stop loss as a point on the chart, when you need to recognize your stop loss as a zone. A stop loss is not supposed to be a spot, even though it is a price. You have to first recognize where the zone is, where your stop loss has to occur. And so your zone, it happens to be in this box here. And you should always pick the bottom of the zone, right? And in this case, you wouldn't set your stop loss there. You would bring it a little further down and take a little more risk, because you can achieve a little more reward, right? So let's say you put your stop loss there, okay? And then Zscaler goes Zscaler, right? So then, okay, it never comes down to touch your stop loss, whatever, right? Okay, now Zscaler's up here, right? We went from here to here to here, and then boom, we're going to open up here, right? Well, what do you do now at the open? The first thing you do is move your stop loss up to break even. Okay? You got to move your stop loss up to break even. All right? And when you do this, now you cannot lose money on this trade. You cannot lose money. You basically are now in either a profit or no profit situation, but you will never make a loss, okay? So this is how you do it. You first of all establish where your stop loss is, the zone, okay? And then you set your stop loss below that zone because you don't want a market maker to price you out. But then once you have achieved the trade outcome that you want, then you move your stop loss up. The problem is majority of you guys set stop losses too tight. And how do you avoid that? Well, the problem is that majority of you will look at this as the stop loss. This is where you think the stop loss is, and you say, oh, it's below this, so, oh, okay, I'm going to set a stop loss of $3. Well, you have to realize something. The stop loss goes based on the time frame you're looking at, the dollar movement, the volatility. It goes by a lot of things, and that's the reason why you have to use a zone, okay? So this is one example, right? I'll go another example, and we can see if that kind of helps you out over here, okay? Let me just read this here. Good morning, good morning. Hey, let's get it. Yo, Big T fell asleep to the course, waking up to it again. Awesome, Kabir. That's awesome. It's going to be a great day in the rest of the week. Some stocks looking to pop. He has nuggets. He's looking to drop. Nuggets for breakfast. Opinion on Tesla selling shares. Not a good thing, in my opinion. But who cares? It's a good move by the finance team. I made a tweet about that. I said, great decision by the finance team who has been really taking advantage of their leverage equity position here. I think it's smart, but surely stockholders know what this means, right? If Tesla selling shares, what does that mean for existing stockholders? That's dilution, okay? So if you like the stream so far, make sure you smash the like button, guys. It's something that I really would appreciate you doing, okay? All right, so let's see here. Opinion, okay, I'm still diamond handling XOM calls. That's awesome. 2.6 million bet on puts yesterday. The front page article on MW about stock market pullbacks. Be careful. Yeah, that's what I'm saying as well. But, whenever there's bearish news, that probably is going to set the market off to go even higher. Okay, cool. Trading has a long... short position button which does the 2-to-1 ratio for you. Yep, you could do that as well. That's also a possible scenario. There's this over here, this thing right here that sets, you can set a 1-to-2 risk to reward ratio or any ratio that you want actually. See, which is pretty cool. That's something you can use. I like to do it the old-fashioned way just because I want to show you how to do it and then don't rely on the calculation part of it. It's something about being, mechanical that is very rewarding sometimes. Okay. This breakdown is golden. Thank you, M. How do you calculate the price of the option for the stop loss in relation to price of the stock? So that's a good question. Okay. This is something I go through in the mentorship course. But you know what? I'm feeling like giving today, and so I'm going to give you guys a little hint on how you can do it, okay, and give you guys the nugget, okay, because I think that eventually, if you just use a little bit of your imagination, you would be able to figure this out, okay. So let's say you this is your entry, right, and your stop loss is a whole how many dollars move? It is about $8, right, roughly. Well, what other measurement can you use for $8 for your options contract? You could either do a pre-assigned risk at 20 to 30%, which is what people do, okay? 20 to 30%, right? This is what most people do, right? Or you can use our little friend called delta, right? Remember that every move in delta is the per dollar move of the stock. Now, obviously, this is not a very accurate use of a predictive stop loss measurement, but it gives you a ballpark range, right? Because delta also takes into account IV, a bunch of other stuff, right? But remember, what is $8? It's actually 8 deltas, right? And if your contract has a delta of 0.5, right, times 8, that's going to be a stop loss of $4. If your contract costed you $8, well, then your stop loss has to be at $4. This is just a hypothetical scenario, right? Then you're assuming a 50% stop loss, okay? But if you're assuming a 50% stop loss, remember that your outcome on the upside has to be 100% at the minimum, because your risk to reward ratio has to dictate that every time you lose one, and every time you win more. Okay, so you have to figure out how to do that. All right, that's something that you have to plan and execute. Okay, so in this specific case, obviously, we need Zscaler to move up higher in order for this trade to be a proper setup here. Okay, so you keep moving the stop loss now. So first of all, this is how you avoid getting cut early. Okay, if it does move down and it goes beyond this point, then you get cut. Okay, that's fine. You know what? Lick your wounds. Take the loss and move on. All right, move on from this stock. Come again the next time. Look at what the setup is the next time and work with that. Okay, but if it doesn't come down, your calls are still intact. Now, what do? The first time, what do? You move this up to break even, right? Okay, now you're at break even. Well, then after that, ZS moves higher. Let's say it goes to 160, right? Let's say now, instead of being where it is now, ZS is at 160, right? And this is where you moved your stop loss to, right? This was your SL1, the first time, and then now you moved it to SL2 here, right? This is your break-even point. Well, as ZS continues to go up further and further, all you got to do is keep moving your stop loss up. And if you realize on Discord where you see me taking trades, I never say I have taken profits. It's very rare that you'll hear me say I have closed out my position and taken profits. Okay, except for shares in Apple that I recently said publicly that I've sold my Apple shares. Why? Because I feel like it's overvalued. I think that I want to wait for a pullback and buy more, right? So, okay, what do you do then? You move your stop loss up for a third time, right? Now, instead of being at big SL2, you're now at SL3, right? Okay, and at SL3, then the stock continues to go up. And how do you determine when to move your stop loss up? Now, I like to use a little method which almost guarantees me $100 each time. Okay, let's say that over here at break even, your contract is $5. All right, and the stock moves up by a couple of dollars. Okay, and the contract is now at, let's say, $7. Okay, well, what I like to do is lock in $100 at a time. I move my stop loss up to $6, and I always keep a buffer of about $1 in between. Okay, $1 in between for pullbacks. If a pullback occurs, it's very rare for the stock or the contract to lose $1 in value. Okay, but 50 cents, absolutely. So you have to be careful. Okay, and I like to do that. So then if it moves up from 8 to 9, then I move my stop loss up from 6 to 7. Okay, or basically every single time I lock in $100 at a time. $100 every single time. Up and up and up. Okay, and this is really an easy way for you to keep locking in profits. Now, eventually what's going to happen is ZS will be here, right? And then you are going to move your stop loss up and you're going to keep locking it in, right? And you're going to move it up and up and up. And then what's going to happen? It's going to come down, touch your stop loss, and that's it, right? And that's how you let it close your trade out for you. You let your stop loss close trades out for you. Okay? I almost never take profits, guys. I let the stop loss do the work. Why? This is how you never lose enough money, never leave money on the table. Okay? And I hope that helps you out. I really hope it does. Okay? Let's see. You may have explained this, but what is the correlation of SPX with the market? What do you mean by that? The SPX is the market. Man, these webinars are straight fire. Thanks, T, again for the refreshers. No problem, Daniel. Appreciate it. How much do you recommend setting your stop above the limit? Well, really depends on the situation. As I told you, I like to take it $1 at a time. Is it me or Roku and Netflix starting to look hot again? Everything's looking hot, right? Is it Delta? Yeah, that was the answer. Is it possible to protect yourself against gap downs? That might be jump over SL if you're doing an ER play. No specific way to protect yourself against that, except for buying puts. After setting lines for risk and reward ratio, is there any way to lock them so you can just drag them? I think lock. There you go. Just press that and you're done. Do you have a rule for how far away you put your stop price to limit price? No, I do not have a. It's based on my risk to reward ratio and also my setup of the demand or supply zone. Okay, I'm gonna show you another example and then we'll call it a day for the webinar, so that you guys get a better idea on what I'm talking about. Okay, so maybe one of you guys want to recommend me a ticker, and I can do it. Okay, let's see. This advice has definitely helped me in the past. The challenge for me is extreme volatile stocks to jump at a time. Yeah, that's an issue, right? The thing is that, like, the problem is here, okay, for a volatile stock, you have to take into account the volatility, right? And for volatility, what you have to do, this zone has to be wider, okay? So let me give you an example. Tesla, right? Okay, Tesla. Let's say yesterday, right? When was it? Yesterday, 31st, 2nd. Yesterday's not a very good example. You can see this is a dual zone here, right? So it's a key level here. You can almost expect Tesla to come back here at some point, test this, and then go back up again, right? But the thing is here, it's like, okay, so if you took a long position, right, then where does your stop loss get set, right? And the thing is that, oh, this ran like crazy yesterday, right? So like, how do you manage this position, right? With Tesla, it's so difficult sometimes, okay? Well, for Tesla specifically, right? So where would your zone be? This would be your entire zone, right? This would be your entire zone, okay? And then obviously it depends where you took your position. I would guess like you took your position somewhere here. So this would be your zone, okay? And obviously your zone is not going to stretch so far, right? You're going to probably make it a little smaller because this is a very volatile stock, right? So your zone has to be like that. And then your stop loss has to be set below this zone, okay? It has to be set below it, below the dual zone, okay? Below the dual zone. Because this is the key reversal point. So what can happen is it can come down, reverse at this point, and then go back up, right? And this is obviously if you're taking a long call. It's not like, it can't be a short-term call. It has to be a long call. It has to be at least 2 months out, right? Which is going to be super expensive, okay? So keep that in mind. Let's see here. What if that drop is after market close? Well, you can't really do anything about that if it's after market close, right? Do you set stop loss for leaps? Absolutely not. No, I don't. Can you set a stop loss after the purchase? Yes, you can. That's what you're supposed to do. T, wonderful insights on how to manage positions. Unbelievable value, mate. Thank you, man. Thank you. I appreciate that, Ram. My stop loss never works. It never triggers. Probably because you're using a regular stop loss. Try switching to a stop limit order. And refer to my Instagram. I have ways, showed you examples on how to set it. Okay, we'll do one of these. Walmart, maybe. Okay, let's see. Card is an example. When you set a stop is a market order, or do you have a limit price in case of a gap down? What you do is you set a stop limit order. Okay, so let me explain this very briefly right before we get any further here. There are two types of stop loss orders, or actually there are more than two types. Okay. But the main two types that I use are stop loss and stop limit. Okay. A stop loss is when you have a order that is above or is at the price that you want to trigger. Okay. Now, during times of volatility, okay, the stop loss may not be triggered. Why? Because during volatility, there is slippage of spreads, which means that somebody may not want to buy the shares from you at that specific price. It may skip through. So let's say you, for example, there you have set a stop loss at $400 here. Okay, maybe during an intense sell-off, nobody wants to buy at 400. So what does it do? It skips to 399. Okay, and so nobody wants to buy at 400 when the volatility is high. Then it skips to 399. Your order never gets filled. Okay, now what is the stop limit though? the stop limit instead is a stop loss that converts to a limit order. So a limit order is a hard line, which is the absolute limit. Okay. During a period of volatility, what a limit order does is it ensures a fill. Okay. Why? Because you have a cushion. So this is your stop loss above the limit order. Okay. And it's called a stop limit because the stop order is converted into a limit order at the stop loss price. Okay. So let's say here, your limit order is at $400 and you want to sell the stock at $400. This is your limit. It's your limit. It's your absolute limit. What do you have to do? You have to set a stop loss at $401 roughly. So what happens is when the stock comes down to touch $401, this limit order gets sent to the broker to say, hey, we have hit the stop loss and now we need to execute the limit order. This is an added layer of security to ensure that you get filled. Okay? Sometimes even limit orders get skipped over, but you have a higher chance to get filled on a stop limit order than a stop loss. That's the reason why you always use a stop limit order. With the stop loss, you do not have this added cushion between your limit price and your stop loss. Okay? So just very briefly, want to explain that. Okay, how do you make sure your stop loss get... Okay, so I just explained that. Do you walk through a Thinkorswim demo on your course, or can you do a live demo for us here? I do it on my course. I go through a live demo on my course. TOS has a great learning tools on their websites on how to use the platform. Yep, you could do that as well. There's also... I also have a complete breakdown on how to set it up on my Instagram. If you go to my Instagram page, scroll down, okay, right here you will see it. How to set a stop loss on Thinkorswim. Step by step, I go through it. How to do it on mobile, okay, and how do you do it, see, with the stop limit order, okay, and how do you do it on the PC as well, on the desktop, okay. So I have that post there. You can go have a look at it. It's definitely going to help you out if you go have a look at it, okay. Great. So if you like the stream so far, make sure you smash the like button, guys. I really do appreciate if you do that. Let's do another example here. So I think somebody recommended Walmart, so we'll see what happens here. This is not really a very good example. What about CrowdStrike? Somebody said CrowdStrike. Why you guys keep choosing stocks at all-time highs? Jeez. DocuSign, eBay. Okay, so here's one of them, right? Okay, so let's use eBay as an example here. Okay, so you see nice little support zone here, right? Okay, so first of all, where is your zone, right? So first of all, you see all these legs on these candles, right? This is where your demand zone is, right? How do I know that? Well, first of all, this is the bottom of the zone, right? And then, first of all, look at how long these legs are, right? This is where the zone actually starts. So you need to find where the start of the zone is and the end of the zone is, right? So now this is your demand zone. Why? Because the stock came down here and it keeps coming down here to pick up liquidity before going up again. Pick up liquidity and then go up again, right? Pick up liquidity and then possibly go up again, right? So, okay, so you take a long position here. Let's say you enter here. Well, do you enter here first of all? Probably not, right? Do you have a confirmation that this is going up yet? No, you don't. What do you need to wait for? This is the wave down. You have a wave up. You need to wait for another wave down. You need to wait for another wave up, another wave down. You need to see two, if you want to be less, like, if you want to be risk averse, you wait for two waves up, right? This is the first wave and that's the second wave. Number one, number two, right? And they need to consecutively make higher highs and higher lows, right? Then only can you confirm that this is now a uptrend, right? But if you want to be more risky, then what do? You wait for this to come down, make a higher high from here, this low here, right? And then you enter here. This is your entry. Okay? So there's a possibility for both ways. I personally like to take the safer approach and wait for two waves. Okay? Once I have a confirmation, then I enter right there. Right? Okay, so then you enter your trade, right? Well, where are you going to set your stop loss? Well, your stop loss has to go beyond this zone, right? It has to be below it. It has to be actually quite below it. So $53, right? That could be your stop loss. Okay, so okay, then that's your stop loss there. Well, okay, then your take profit goes somewhere else, right? Now, where is your supply zone on the top? Well, you have this over here, right? And obviously, this is part of your supply zone, right? So this has to be part of your supply. But look at how big the supply zone is here, right? You can see the supply zone is pretty high. It's pretty top heavy, right? Why you have this little bit here? This is all considered supply here. Why? It came up here. Every time it came up here, the price came down, right? Came up, price came down. Came up, price came down, right? Came up, price came down. Came up, price came down, right? This is the area at which sellers are entering the market, right? So you have to be careful with that, okay? So, okay, then you set your stop loss here. Okay, then eBay moves up, right? eBay moves up. And it goes from maybe 54, wherever you enter it, right? Okay, maybe you enter somewhere around here, right? And then eBay goes up, starts going up, right? And then goes to hit 59. Well, what do? Do you just let your trade run with this stop loss? No, you move the stop loss up. So you move your stop limit order now to break even or something, right? Above here, $56, something like that, right? That's your first move, right? Then it goes up further. Okay, lock in some more profit, another $2 or so, right? Okay, move up your stop loss. Then you move it up again for the third time. And then you leave it, right? Okay, then it goes up here, tests the top of this zone, comes back down, hits your stop loss, and you're out. That's it. That's how you maximize these gains. Maximize them, okay? You want to have the maximum possible gains, all right? So that's how you can tackle this situation, and I really hope that this helps you out, okay? Great. You think we can get a couple more likes on the stream? If you really find this interesting or useful, I would really appreciate it if you could smash the like button. That really would mean a lot to me, to be honest. So okay then. So that's all I have for you guys today. I hope that this helps you out. It's a simple and easy, effective method for you to manage your stop losses. Okay, you got to use supply and demand zones. You need to understand how the dynamics work. First of all, what is supply and demand? I just went through this with the class today. And many people understand it from a perspective like, oh, it's a point on the chart where stocks get either bought up or sold off. But do you really understand it though? That's the question. Okay, there is a really deep understanding required for supply and demand. Okay, and it's just more than just price action. Okay, it's a background. It's the mechanics of the trading. So with that, I'm going to end the webinar today here. If you like that one, let me know. On Thursday, we're going to go over time value of money. It's a concept that you should know about. Very, very important concept in my opinion. How often do you lose profit if it only reaches 80% of your target and then gets clapped down by your explained method? How often do you lose profit if it only reaches 80% of your target? Wait, what? I'm confused on what you're asking me right here. How often do you lose profit if it only reaches 80% of your target? 80% of your target. Well, the thing is, I don't usually have a target. That's the thing. See, when you're taking a trade, and let's say you have a target in mind that's up here, right? This is your supply zone. Well, it could go higher, right? So for me personally, this is not a target for me. This is just one point that I have to be careful that if the stock starts to move into this zone here, I want to lock in more profits. I want to move my stop loss close to it. I want to move it close to it, like somewhere below it, right? Right below it, somewhere here. Why? So then if it comes up here, it fails to break and comes down, I've maximized the lock-in of my profit. Instead of it coming up here, coming down here, and then me locking in profits here. You see what I'm saying? I want to maximize my profit gain. So you keep moving the stop loss up to lock in the max. If it goes higher after you've locked in, it's fine. It's okay to take profit is better than loss, guys, right? You would rather be green than red. Don't be greedy. That's what's important, okay? Many people lose a lot of money being greedy. That's the problem, okay? So seriously, just try to use logic sometimes, okay? It's the easiest way to make money. All right. Thank you, T. You the bomb for sharing on the knowledge and breakdown. Absolutely, no problem. Definitely. Plan to shout out any action that you see on Twitter today. I already did, Jason. I did. I put out some charts, so go have a look at it. Okay then, guys, appreciate it. If you can smash the like button one more time before I leave, I would really appreciate that. I was really hoping we could get to 100 likes. There's 113 of you. There were about 140, 150 of you earlier, and I was hoping that we would get up to 100 likes. The more people that like the stream, the more YouTube's going to recommend it. So I really, really hope that you could just take a second out of your day to like it. If it was helpful for you, it's going to help other people as well. So, yeah. Thank you guys for tuning in once again. Tomorrow we have fundamental analysis of Lululemon. I hope you guys will tune in. I'm going to do the fundamentals and then let you guys know how that goes. If you want to go along, do your own analysis, come through the stream and then double check and see what we did what we did together or not, then you could do that as well. So thank you for tuning into the stream, the webinar. Have a great day, guys. Have a great trading day. Remember, be careful of this market condition. It's looking a little choppy. Okay, so be careful, and I will see you guys tomorrow for the live stream. Have a good one, guys, and peace out.